Yo, what's going on, guys? Welcome back to the channel. If this is your first time here, my name is Vince and I post on this channel every single week about the stock market, about personal finance, about trading. So if you guys are into that kind of stuff and you want to learn a little bit more about it, then go ahead and subscribe to the channel. So unless you've been living under a rock for the last 5 months, then you probably know that we're going through one of the most volatile times in market history. 30 to 35% drop, followed by one of the most bullish recoveries ever recorded. You have the pissed off bears that continue to say the market is being pumped up by the Fed. You have the optimistic younger traders that are buying stocks for the long term, hoping that they got a good discount, which I probably place myself in that bracket. You have the Wall Street bettors that are doing some YOLO call options on some quality stocks. And then you have the institutional traders that are sitting at the top and laughing at all of us. You also have the media that are instilling fear and optimism into all the traders. And quite frankly, no one in the world knows where the stock market is going to end up. So I think we can all agree that the last 5 months in the market have been absolutely insane. For some, extremely exciting and interesting that like to watch the market and are excited to see how it unfolds. And for others that are a little bit older, that had their money in the market as retirement, who were advised by their financial advisor to sell it at the bottom, definitely not so fun. So in today's video, I want to go ahead and take a step back from all of that fear, from all that panic, from all that question, and just look at the charts, simplify it, do some technical analysis on the Nasdaq, on the S&P 500, and on the Dow. Which one fell the most, which one is recovering the best, and why? So if you guys are excited to see this, go ahead and smash that like button, and let's go ahead and roll the intro. Alright guys, so I have the indices pulled up on the screen, the Nasdaq, the Dow, and the S&P 500. We're gonna go ahead and draw some trend lines, some support and resistance zones, as well as some fancy Fibonacci retracements to answer the question of which index is performing the best. There's a clear winner here. One of them is outperforming the rest by quite a bit. Once we answer that question, we're gonna go ahead and try to answer the question of why this is occurring. So let's go ahead and dive right in. Alright guys, so here we have it. We have the Nasdaq, the S&P 500, and the Dow here on the right. What you guys can see is we're looking at the February drop here because of the virus, and then the most recent bullish recovery for each chart. So the first thing I want to do is I want to look at the percentage points of each drop and as well as each recovery. So if we go from top to bottom here on the Nasdaq, we can see that from top to bottom we dropped just about 30%. If we do that same thing on the S&P 500, from top to bottom, we can see that it was about 35%, so about 5 percentage points worse on the S&P 500. And then if we look at the Dow, if I get my tool out here, we can see that it was just about 38%. So the Dow was by far the worst percentage point drop, 38% here. We have a 35% drop on the S&P, and we have a 30% drop on the Nasdaq. Now let's go ahead and do that same thing for the recovery. So if we look at the recovery, we can see that from bottom to top, we have a 37% recovery for the Nasdaq. So that recovery was more percentage points than the drop, and that's possible because when you come from a lower value, you need more percentage points to get back to your original level. So we're up 38% and we're down 30% on the drop. Now for the S&P 500, from bottom to top, we're at 33%. So we dropped 35 and we recovered 33%. And then on the Dow, finally from bottom to top, we recovered 35%. So Nasdaq is the least drop and the largest recovery out of these three indices. Now the next thing I want to look at is the Fibonacci's, which will give you guys a really clear picture of which one is outperforming the others. So if you draw the Fibonacci from the recent high to the structure low here, for each one, let's go ahead and do that before we talk about it. So bottom to top, and finally for the Dow, bottom to top. So what you guys are looking at here are levels of retracements. So you have a 61.8, a 50, a 38.2, 78.6, and the 100% retracement. Now what this means is if this stock went back up to this 100% retracement, you would be back to the original levels. So it shows you how much the stock has retraced on this recent drop. So what we can see on the Nasdaq has recovered just about 78.6% of this drop. Just here in the last few months. So we're back up to this 9,000, 9,100 level. It has broken this golden zone of the 38.2 to the 61.8 retracements, has broken right through that and is now up to this 78.6. Now we can't say the same for either one of these indices. So if we look at the S&P 500, we can see that we've been stalled out here at the 61.8 and it formed a pretty nasty double top here. So if I draw a circle here, we have a pretty nice double top here at the 61.8, and we clearly do not have that here on the Nasdaq. So we're sort of finding a channel here between the 61.8 and the 50 retracement right now on the S&P 500. Now on the Dow, the story gets a little bit worse. So Dow has gotten up to this 50% retracement, but has not been able to reach that 61.8. So we're sort of seeing a channel here in this level. So if we draw a circle, we can see that we're sort of channeling between the 50% retracement, actually broke through it and finding some support and coming back up to it. So the clear winner here is clearly the Nasdaq. Now the Nasdaq is outperforming these two sectors. Now the next thing I want to answer is why. So to answer this question of why the Nasdaq is outperforming the Dow and the S&P 500, it really comes down to what is inside the Nasdaq, what sectors as well as what stocks. Now I think most of us know that the Nasdaq is heavily weighted on the tech side, with Microsoft, Apple, and Amazon making up some of the largest percent of that index. I think most of us can rationalize why tech is leading everything else right now. People are at home, they need technology to continue to communicate and to continue to have the economy run. So most of these stocks were not as affected as some others. Microsoft on their recent earnings call said that they were able to beat pre-virus expectations from Wall Street, which is pretty impressive. Showed that they had very little revenue impact because of the virus. So I set out on a goal to get you guys a clean, up-to-date visual to see exactly what sectors as well as what stocks are in the Nasdaq. Now you may think that this was something I can easily find online, but that was totally not the case. Every visual that I saw was complete trash, or the data was from 2016. So what I had to do was I whipped out the Excel and Tableau experience and built you guys a nice pie chart for you to see. So here, let's go ahead and look at the final visual. All right guys, so here you have it. Here's the Nasdaq sector weighting as well as the company weighting. So this big blue behemoth here on the left side, that is tech. 48% of the Nasdaq is tech stocks. Look at how much it outweighs these other guys. So consumer services, you have healthcare, financials, industrials, and consumer goods around that 7 to 10%, and then some small guys that are under 1% over here. Now on the right side, we have the company weighting. So these four stocks right here make up a little bit more than half of the Nasdaq. That is Microsoft, Apple, Amazon, and Alphabet. So if these four guys do really well, the Nasdaq does really well, and that's exactly what's been happening in the market. You have Facebook, that's respectable here, around 4%. You have Intel, Nvidia, Netflix, PepsiCo, Adobe. You even have Tesla in here at around 1.6%, I believe, right here. So some really great names, some really high tech names, some really great tech names that have not been affected as much due to the virus. And that really comes down to why the Nasdaq is performing and outperforming the S&P 500 and the Dow. So we came to the conclusion that when comparing the Nasdaq, the S&P 500, and the Dow, that the Nasdaq is the top dog in regards to growth. So with that information, how do we invest on it? Now, before I say that, I need to say that I'm not a financial advisor, and everything you hear on this channel is for entertainment purposes only. But maybe if you're a younger investor out there and you have time on your side, maybe you want to move some stocks into some growth stocks that are in the Nasdaq. Some tech stocks like Microsoft, Apple, Google, Amazon, those guys that will give you that quality growth. Now on the other side, on the flip side, you may be losing out on some quality dividends. Most of those tech stocks do not offer quality dividends. And if you're a dividend guy and you like to have a portfolio full of dividends, then most of your stocks are likely in the Dow. So there's two extremes to it. If you want to go towards growth, you go towards the Nasdaq. If you want that dividend income, most of those stocks are in the Dow. Now personally, I like to be somewhere in the middle. I have some tech stocks in my portfolio and I have some dividend stocks in my portfolio to even it out and diversify. So guys, I hope that some information in today's video will help you out in your investing journey. If you enjoyed the video, make sure to smash that like button. If you want to stick around for some future videos, make sure to subscribe to the channel. I hope you guys have a great rest of your weekend, and I hope to see you in the next video. Peace.